Jim, welcome to the podcast, and thanks so much for joining us. I appreciate you making the time.
Well, thanks, Jeff. Thanks for having me. I've been looking forward to this for quite some time.
I know we had to reschedule once or twice for different calendaring reasons, but I'm glad we got on the books, and I'm really looking forward to the conversation today.
Same here.
You know, one of the things we had talked about that I think is really an interesting topic for our audience is your decision to get into this kind of new product line of unsecured lending. I'd love to dive into both why you felt like that was important for the bank in general, and then how you picked a path forward for achieving that. Because I think it's a story that will resonate with a lot of people actually.
Sure. So let me give you some background. I mean, Apple is a privately owned institution, and we're quite
Mm,
conservative in the types of loans we make and the places in which we invest our funds. And as we've grown, we've kind of struggled to try and find new asset classes. We've traditionally been
mm,
a real estate lender in the New York area, as well as doing some large, pretty safe commercial and industrial lending. At the same time, we somewhat limited in the products that we offer our branch customers. And up until our partnership with Upstart, we did not offer any unsecured credit products to our
mm.
customers. So, having done our due diligence and chosen Upstart as our partner here, it's really allowed us to launch a new line of business, which is unsecured installment loans, which we've been live with you guys since I think it's February.
I think it was February. So what was it about, I know you said you had trouble maybe generating asset classes. I know I talked to a lot of institutions that are sitting on more cash than maybe has historically
Yep.
been true for them. Talk to me a little bit about what it was about the business that made you think, hey, we need to find something new to invest in, or to some kind of new income generating asset, because it feels like that was the driver more than like the
Yep.
desire to be in a fintech partnership per se.
So, well, the fintech partnership side of this is actually very important. But with respect to the first part of the question, we need a new asset class, and this allows us the opportunity to start to build an unsecured installment loan
Mm,
portfolio and see how it performs well ahead of the time, well ahead of the point at which it might become super material to the bank in the event
mhm.
that there might be some problems in the credit quality. Yes, like all banks, we're sitting on a ton of cash and we need places to invest it. Secondly, as I said earlier, we needed to broaden our product line to our customers on the credit
Mm,
side. And this is one thing that we didn't have. So the fintech side becomes important because it has allowed us to partner with Upstart in a way in which it's really been super easy to get started. We're letting you guys do the servicing, and of course using
mhm.
your AI model here. So there's been really very very little investment required upfront to get into the business. Longer term, we may take a look at whether or not we service this in house, but not ever having had a consumer lending operation, we do not have the servicing capability for this, and that was yet another component that you guys offered in addition to your AI.
Yeah, I think that's a really interesting point, your message that there was a launch strategy, and maybe it wasn't exactly the long-term vision in terms of growing into servicing. I think you have a similar vision around how much risk appetite you have and kind of getting going and getting comfortable and maybe reevaluating that over time. But that concept of like how do we get in market and learn, and then take those learnings and maybe grow in different ways over time is I think a really important strategy that I like to see you guys executing.
Yep, and I think we believe in your model too. Um, we're as I said, we're a very conservative lender, and we did not have the expertise to do this in house, and we certainly
Mm,
weren't going to do it the more traditional way. So we like what we've seen in the industry with AI,
mhm.
and frankly, we had the luxury of seeing how your model worked through the stress of the pandemic on the portfolio that we've built for everybody.
I
That was
remember
lucky
just
on our
sitting.
part, but it survived very well and really kind of convinced us that maybe there's really something here.
I remember sitting in your boardroom pre-pandemic, and somebody actually asked me about the
Yeah.
sustainability of the model through a geopolitical disruption, and I thought, I don't know that I can speak to that. And a few months later, I
You
think
know,
it was a relevant question.
No, it turned out to be a great test, and it passed the test with flying colors.
Yeah, that was it was fun to get to come back and show you
Yeah,
guys those numbers because I know there was some nervousness and then I think the
yeah.
numbers were compelling. So you had mentioned not having a lot of consumer credit products to offer your customers and wanting to kind of expand that product portfolio. How do you think about that outside of the unsecured installment program that we're working on together? Are there other areas you want to invest in over time that you think are important for a lender trying to reach consumers today?
Um, yeah, well, first of all, what your business brought us to is that, the loan volume we're seeing today, I think, is roughly 80% referral through your network and about 20% coming through our website portal, which doesn't mean they're all our customers. But we've also simultaneously launched, we've never had an online account opening service,
Mm-hmm.
and we've just launched that. So tying some of your referral business into that is something that's the next step for us. So we think it's and that's the first end-to-end digital experience we've been able to offer a customer right through to
Mm-hmm.
account opening. But in terms of other products, we are speaking to you guys about some of the other things that you're working on outside of just the consumer installment. And we are speaking with you guys about perhaps figuring out a way to use your AI to help us underwrite some of our consumer overdraft lines of credit, which are on
Mm-hmm.
the balance sheet, but are not something that we've really offered in any aggressive way to our customers. We have a pretty simple underwriting process, but really feel as though
Mm-hmm.
we've underserved our customers with just that kind of simple product.
Mm-hmm. Do you see a shift in the mix of products that consumers are asking for? I think that is an interesting product that's been underutilized by many. It's kind of there, but not heavily leveraged. Are there other things you see consumers looking for, demanding that you feel like are places you want to go?
Well, on the credit side, I guess I'm learning that might be a market for auto refinance. Not everybody gets a
Mm-hmm.
1.9% loan from their dealer, which, and uh, that, and of course, there's the whole the refi market for
Mm-hmm.
student loans, perhaps.
Yep.
you know. But I mean, your product's been great. It's been a great most of our customers have, whether it's referral or not, a lot of it's all credit refinance. It's basically credit card
Mm-hmm.
consolidation, debt consolidation,
Yeah.
and that's where I think the opportunities are. It's in lowering consumer costs through some debt consolidation or refinance.
Yeah, consumers are waking up to the expense of carrying balances on credit cards over time, which
Yeah,
it
yeah,
turns out they're a great way to buy stuff, but not a great way to borrow to pay for it.
yeah,
If you got to
exactly.
borrow for any period
Yeah,
of time. So
yeah.
um, yeah, how do you think about the way banks approach earning loyalty in the digital age? Like I often think that loyalty used to be a kind of real estate driven in many ways. Like it was nearby, I came in, maybe it was relationship, I knew the person behind the counter. But as things shift digital, it feels like that has to change. And I'm curious if you have a perspective on what you think kind of replaces the real estate and relationship, or
Yeah.
is it the same and just a different mediation for that? But what do you think happens to the way you earn loyalty in the context of a digital interaction?
Well, our perspective on it is it's a combination of both. Clearly, consumers use the real estate much, much less, regardless of what age group they're in.
Mm-hmm.
But what at least we find to this point in time is that consumers, even younger consumers, do like to kind of see their brand in a
Mm-hmm.
physical presence over something that's just
Interesting.
purely digital. And where Apple Bank has lacked to a certain extent, although we're catching up rapidly, though, is really staying closer to the leading edge in the technology offerings for our
Mm.
customers. And the bank is going through a massive technology upgrade across the board. Um, Things like Upstart and our digital offerings are only one part of it, but even in our back office, we're doing a lot of technology upgrades um, because I think it is consumers are definitely less loyal. That's just the
Mm.
way the industry's gone. And in order to really keep them loyal to you, you need to be able to offer them a good menu of digital services and have your
Mm-hmm.
branches there effectively longer term as a backstop when they need some personal service or really do prefer to come in to the bank. But this is a long transition, not unlike what's gone on with retail and the Amazons of the world. You know, Amazon is a great company, but they haven't put every retailer out of business at this point. But I do believe that at some point, you know, clearly it'd be naive to say that banks were not going to be purely digital at some point in the future. And so the only way you can really retain loyalty is, I think, by making sure that your technology is really kind of up to date, which does mean it becomes expensive because it's hard for a bank. Somebody gave me a statistic once and said, you know, and Chase is a big competitor, I was in New York, obviously. Their annual technology budget is equal to Apple's $15-16 billion asset base. So we can't compete with Chase across the board, but we need to kind of figure out our sweet spots and kind of go after the customers who are not their prime targets. And that's what we've done in our branch side too for years.
How do you think about the customers you are targeting? What's the, you know, they're not the prime targets for the Chases of the world. How do you think about what demarcates the customers you're going after?
So, you know, in the marketing world, you know, there's the term service hogs, which means they require a lot of service. And I
Yep.
think our customers tend to be a little more demanding when it comes to service, whether that's in branch or through our call center or in the use of the technology that we offer. You know, but that's where there's availability of market penetration here. So we've kind of structured our bank accordingly. So that's a little bit more of it's a more expensive way to attract customers, but we try and run a pretty lean operation to offset some of the more direct expenses. But we do believe we provide decent service. And when we do surveys of our customers and things like that, they seem to confirm that. But, you know, service is not just personal these days. It is, again, as I said earlier, technology is a big aspect of it too, which is why we're spending a lot of money on technology.
So I want to ask you two questions on that front. You'd mentioned not just the consumer-facing technology or the customer-facing, you know, bank, you know, business client-facing technology, but back office technology investments that were important. I'm very curious where you're making those investments and what you're hoping to get out of them. Where you see as the big wins for not just the client-facing side of technology, but the kind of internal side as well.
Well, ultimately, a lot of this is effectively client-facing. So right now we're in the midst of a 2-year project to upgrade our core operating system. And that's the system that all of our branches use, and that's the system that our call center uses. So to the extent that you can speed up a process, make it much less paperless, shorten a phone call because it just takes less time to access customers' information. It is all customer facing, really. You know, in this, it's through the service side, not necessarily always through the product side. So if we can improve the quality of service by speeding up the time it takes to complete that service, then that's the goal of what I'm calling our back office technology improvements.
Yeah, it really all starts at that client experience, but some of those improvements are enabling your team or simplifying processes and making those things possible. Are there technologies in particular that you have your eye on? Probably the two I hear about most are AI, which obviously we've talked about a little bit, and cryptocurrency, blockchain, whatever you want to call that space. Are you playing with those? Are there other things that are kind of on the horizon that you think are interesting and you're trying to get a handle on that you think are relevant for the audience? Or I'm kind of curious what you see coming down the road, if you will.
Yeah. So AI is something we're taking a good hard look at in a few areas. And frankly, our partnership with you is really the first that's really truly utilized that. Although, you know, the business we do with some of our debit card processors and things like that have used a form of AI for a long, long time. So I often laugh at the term fintech, but not to take anything away from Upstart, but the Visas and the MasterCards of the world were really sort of the original fintechs and still are.
Absolutely.
So all of us use AI in a certain way. Sometimes you don't even realize that. Some automation, once we get our core upgraded and do a few other things, you know, automating some of our processes, you know, robotic automation is something we need to take a look at, but we're not quite there yet. Right now, our real focus on technology is anything that's consumer facing. And outsourcing or partnering with companies like you guys, or even call center support services and things like that. To improve, again, it's all trying to improve the customer experience through technology. Because as we said in the beginning, I mean, that's at least my perspective on how you need to do that to build continued loyalty from your
Yeah.
customers, especially as they get younger.
Well, and it seems to me like for an Apple or any bank that doesn't have the 15 billion in annual technology
Yeah,
spend that a Chase does to compete, you kind of need to leverage partnerships where there is very large investment in specific areas where you can, provide that best in class service, not by building it all in house. And to your point, I think this sense that fintech partnerships is new is kind of crazy to me. I look at it and go, well, your core service provider is
yeah,
not that different. Your Visa relationship is not that different. There's lots of third-party service providers that financial institutions have relied on for decades to provide services, and why partnering with a fintech that's a newer company feels different than that, I think is a bit of just a gap in perspective for the market, maybe in some way, because it feels similar to me. But I'm curious if you see that as kind of the core to your strategy for how you augment the areas that you can't directly, match that investment in to provide that kind of top-notch experience.
yeah. No, that is our strategy. Is in the areas that are important to us, but not necessarily the primary drivers of our business, whether that be on the lending side or even on my side of the bank, the consumer retail side. We are partnering with a lot of different firms. I mean, even our core conversion, as we call it, we ran our whole data center in-house and still are doing that. But through this conversion, it's going to be a fully outsourced model for us.
So you're going to move that, not only upgrade the cloud. I mean, that, by the way, let me just tell you, like, the core conversion to me is like one of the scariest things a bank undertakes. So
It's bank, I tell everybody it's heart transplant for a bank, and it really is.
Yeah, we described similar projects when I was at Google as trading out the engine on a 747 while it was mid-flight.
Yeah, that's right.
Seems like a dangerous thing to attempt. But you're moving it to an outsourced provider as well, so you're going to move from managing that process in-house to having it external.
Yeah.
Very interesting that you can
You know,
find
which gets to that still. I mean, the big providers of those services, that's their primary business, and
Yeah.
I mean, they have the budgets to invest in the technology. We're much bigger than a lot of banks in the country, but we're still too small to have that kind of technology budget at this point.
Yeah. I'm not sure you want to have that kind of technology
No.
budget. It's
Yeah.
it can go wrong a lot of different ways. Is there anything that you guys have tried recently that's you've been surprised by the result of? Any kind of projects you have going out the door where you kind of said, "Well, that's not quite what we thought was going to happen," that are worth mentioning?
Honestly, and it's not a sales pitch for Upstart, but this has been one of the
Thought
more.
it was going to go badly, and then it didn't.
No, we thought it would frankly go more slowly than it did. And although it took us time to get launched because of all of the constraints banks operate under in terms of its internal governance
Yeah.
and due diligence, I mean, the portfolio has been growing very, very rapidly. And so the demand for consumer loans has really surprised us. We have our arrangement with you through which you feed us a certain amount every month, and we have increased that recently, but it seems as
Yep.
though, if it continues to go well, we'll be able to accelerate the growth in the portfolio through your referral business. But also, again, as I said in the beginning, without having to build, I mean, right now, this has not cost me any additional overhead in-house. At some point, I will need some support. And if we ever wanted to bring the servicing in-house, that's a different build. But this has been our biggest, most pleasant surprise, and I really, really mean that. And it's coincident with, the pandemic has just really driven up demand for digital services. The other surprise is just to see the nearly doubling in demand for all of our online services, our call center services, and things like that.
Do you think those things are going to go back? I mean, as the pandemic wanes, and we're obviously right now, maybe it's not waning as much as we thought in certain ways, but I'm curious, do you feel like some of those shifts to digital are going to go back to the old way, all of them? Do you see a reversion to the old, or is this kind of the new normal that we should just be living in and expecting a much more digital interaction from customers on a go-forward basis?
Yeah, so for us, what we have not seen taper is our online and mobile banking usage. And most of it is truly nearly doubled over where it was pre-pandemic. And that's including the growth rate of customers, new users. Our call center volume had the same kind of spike. But since our branches have reopened and we're back, we've been opened pretty much full hours for really now about 6 or 8 months. We kept our branches open. We were a little more aggressive than most people in this area in keeping branches open. But the call center volume spiked tremendously for about 6 or 8 months. And that's what I've seen go back to normal. And I just suspect that those are the branch customers.
Yep.
They'll pick up the phone and call. Some of them may or may not use online banking, but now that the branches are open. So I think the digital stuff for us is probably in roughly a year's time, probably saw what would be 3 or 4 years of what you might have
Of growth.
extrapolated for
Yeah.
growth.
Doubling in a year, that's like fintech type numbers. That's like a Silicon Valley
Yeah.
startup type numbers.
I mean, and it's unfortunate. We were a little late to the game with an online account opening system, and that was a little bit unfortunate. But we just went live with that system as well. So, as I said, we'll be building that out and integrating it into solutions like yours.
Yeah, that'll be great. And I'll be really interested. I'm curious your thoughts. I mean, one of the things that's been interesting, you mentioned to me the Upstart referral network, where Upstart's kind of responsible for finding consumers that might be interested in your loans and directing them to Apple for the actual closing of the loan. But my history talking to banks and even credit unions is they don't typically bring new customers in through a lending experience. They bring them in through a depository experience and then add lending on later. And I'm curious what you think about as we can integrate a depository opening maybe into the borrowing process. Is leading with lending something you're interested in? Because it doesn't feel like the traditional banking way to me to have a lending product be the entree into the bank for a consumer.
Yeah, no, it's not. You're right. And we're going to work with you guys to experiment a little bit on whether or not we can provide some incentives to do that. But historically, and maybe now is a bad time because interest rates are near zero, but historically, one of the ways we've competed in this market, because we're not a Chase with hundreds and hundreds of branches on every street corner, is we've been a solid rate competitor. So what I'm hoping is that I can convert an Upstart borrower into a depositor through some rate-driven product, and then hopefully eventually convert them to more of a core customer. I mean, that time will prove whether that's true. But again, we're getting referrals from we've deliberately have defined the area from which we're getting referrals for you, which is our market area.
Yeah,
So
your
there is some
geographic.
overlap with the brand and where these new faces are coming from. And it's that whole referral and secondary sales process that we're building out right now. So we haven't really even kicked it off, but I think 6 months or so from now we'll see what kind of results we have. But it does provide our sales staff leads that they would not have otherwise had on the deposit
Well,
side.
we'll have to bring you back in 6 or 9 or 12 months and
Yeah.
talk about the results for that. Because I think,
Yeah.
I've heard more and more of the institutions I talk to talking about the concept of maybe I need to lead with lending. Maybe I need to be bringing in new customers through lending products, and can I convert them to more depository or traditional products over time? And I think it'll be a really interesting test case because it's, I think, top of mind for a lot of people I talk to, at least. So, Jim, before I ask you my kind of final closing question, is there anything you wanted me to ask you that I didn't ask? I know I'd sent a list of questions over, and I don't think I got to all of them.
Yeah.
Was there anything you wanted to talk about, or that it was a question you would hope that I would be asking that I didn't get to?
I think the one I had noted, which you did ask, you did get to, is what else might I want from Upstart? And I think I went through
Oh.
that because I've found that you guys have been very receptive to some ideas we've had with respect to using your AI for some of the other things we're doing. And I'm very pleased with the receptivity from your team on that. And frankly, just even though it's not so much related to business development, but the transparency we've had and the response we've had when we've had any kind of customer issue or something like that. Not that there's much of that, but it comes up from time to time, and your group is very responsive. So,
Well, I think I appreciate that feedback, and I think any institution, any fintech or tech or any kind of company that wants to partner with banks has to be
Yeah.
aware of the sensitivity of those kinds of issues and the transparency and speed with which, I mean, things come up, right?
Yep.
People are unhappy and things happen. So, but you
And
gotta
I
be
think 6 months
deal
from
with it.
now, it would be worth having a conversation because by then our portfolio will have grown substantially. We'll see what we're doing
Yeah,
on the cross-selling. And then, by then we'll have some real good performance metrics in terms of portfolio performance as well.
yeah. We'll bring you back on to talk about all of those things. So, Jim, I did send you these questions in advance, which is the three questions I ask everybody at the end of the podcast. So I'm gonna get to them now, kind of rapid fire mode. But what's the single best piece of career advice you've ever gotten?
Be, I read these ahead of time, so I wrote the answers down. No,
Oh,
but
good, good.
and the career advice I give people, although my kids are in their early 30s, don't pay attention to it. It's be patient, be patient. But nobody seems to listen to that advice if you're under 40 years old. So it's basically be patient, and opportunities will come to you, whether they're personal or they're in business.
Be patient, wait for that. But yet, it probably would help too if somebody other than dad delivered the advice. I find that my kids listen to the same things I say from other people all the time. They go, Dad, they told me this really smart thing, and I've been telling you that for 10 years. Would you just listen to me already? But sometimes it's all about the messenger. So my second question: what's the best piece of consumer lending or consumer banking advice you've gotten?
So this is something that we've always practiced here at the bank, and we're fortunate that we can do it because we're private. But we really try not to go with the herd. And in lending, there's a real herd. There has historically been a real herd mentality, whether it's
True.
consumer lending or other products. And banks can get into trouble from time to time, with regulators or with customers or even legally. But banks die because of bad loans, and
True.
it's usually those banks that followed the herd into something. They're the late adopters that have those problems. So we try and kind of go at our own pace and not necessarily follow the herd.
Be patient. Don't follow the herd.
Yep.
Good pieces of advice.
You can see
And the last
there's
one.
a theme there. There's
Yeah,
a
they
theme
kind of
developing in my. Now you're getting insight into my personality.
they pair together well. Jim, is true. And my last question is, what's one bold prediction for the future? You kind of made one about cross-sell. We'll bring you back on, but there was another prediction about what's coming down the pipe in banking or in general that we can hold your feet to the fire in a future episode. What's your bold prediction for the future for us?
Yeah, well, this gets to the whole fintech partnership thing, which I think I mean, fintechs wanted to kind of go down this route on their own, but at least in lending, realized that partnering with banks may be the right thing to do. And I think it definitely is. I think for mid-sized banks like ourselves, I think you probably will see us do more and more in the consumer lending space. The larger banks don't seem to be so interested in it as we move along here. Many of them have actually discontinued some of these services. So I think that there are real opportunities for market share gain for institutions like ours, but partnering with a company like Upstart, who has the artificial intelligence modeling here to kind of really make a difference in making the right credit choices. So I guess the prediction is I think that mid-sized and smaller banks will probably gain market share in consumer lending and safely do so as well.
Gain of market share for mid-sized bank. That's a great prediction. I like that one. It's certainly measurable, so we can bring you back on
It is.
and
Yeah,
hold you
we'll
for
see.
that. Yeah, yeah. I like it. I think it's. I like your reasoning for it as well. Well, Jim, I just say thank you so much for joining. This was a fascinating conversation, and I appreciate you taking the time to do it today.
Well, thanks, Jeff. A pleasure for me too, and I look forward to kind of catching up sometime next year. Follow up on
In
more
person,
our
now
business.
that all this COVID stuff is receding, conferences are back. We'll be able to meet in person, so that'll be great.
Yep. Yeah, we should do this one in person next time.
That's right. The recap will be in person in a couple
Yep.
of months. All right. Thanks.
Thank you very much.